All right, let's get right into it. Michael Saylor just gave a keynote that honestly signals a massive change in the whole Bitcoin story. Now, this isn't him predicting what might happen. He's explaining a shift he believes is already well underway. See, he's not trying to convince you and me anymore. He's briefing the people who already run the system.
And this quote right here is the core of his entire new argument. The debate is over. The question is no longer why Bitcoin matters or if it has a place. The new question is how the existing global financial system is going to adapt, integrate, and basically reorganize itself around this new asset. That is a huge, huge shift in thinking.
So the first big idea to wrap your head around is that the conversation itself has just completely changed. This isn't the old Michael Saylor trying to convince corporate treasurers to buy Bitcoin. No, the message, and maybe more importantly, the audience for that message, has evolved into something way, way bigger.
And who's he talking to? Well, look at this list. This isn't some hypothetical wish list. Saylor's talking about his actual recent meetings with the very people and institutions that control global money flows and set financial policy. When these are the people in the room, you know the conversation is happening at the absolute highest levels, probably behind closed doors.
Okay, so how does he even start that conversation? Well, to get these players on board, you have to speak their language. And that's exactly what he's doing. He's not positioning Bitcoin as some crazy rogue internet money anymore. Instead, he's framing it as a brand new form of a very old, very respected idea: capital.
And this table just lays out his approach perfectly. By putting Bitcoin right there alongside gold, the S&P 500 and real estate, he's basically saying, look, this is just another form of capital. It's not some alternative system trying to burn everything down. It's just a digital commodity sitting right next to the other pillars of traditional finance. It's designed for our digital world.
And that leads to what he calls a crucial inflection point. Saylor's argument is that the US, the regulators, the politicians, they've pretty much settled on this definition of Bitcoin as digital gold. Now, why does that matter so much? Because the US is the most powerful financial regulator on the planet. When the American system decides to custody and integrate an asset, that behavior tends to ripple out globally. This isn't about politics, it's just about a structural precedent being set.
But just holding an asset, that's one thing. An asset's real power, its ability to weave itself into the fabric of the entire system, that comes when it can be used as a foundation for credit. That's the bridge. That's what turns a simple store of value into actual financial infrastructure.
So he breaks it down into this simple three-step path. First, Bitcoin gets recognized as a real asset class. You could argue we're pretty much there. The critical second step, which he says is happening right now, is when the big banks start treating it as acceptable collateral for loans. Once that happens, you get to step 3, and that's when Bitcoin stops being just a niche investment and starts becoming a structural piece of the financial system itself.
And if you want to get your head around just how massive this idea is, you just have to look back at gold. Gold didn't take over the world because everyone was trading gold coins. No way. It dominated because the entire world built its credit system. We're talking sovereign debt, mortgages, corporate loans, the whole shebang. On top of it, gold was the invisible capital layer. The credit was the system everyone actually used day to day. Saylor's arguing that exact same pattern is just repeating itself in digital form.
Now, you might be thinking, okay, that's a nice theory. But this isn't just theory for him. Saylor is using his own company, MicroStrategy, as a live, real-world demonstration of this playbook. They aren't just sitting on a pile of Bitcoin, they are actively trying to turn that passive digital commodity into productive, useful financial instruments. And to really get what they're up to, you have to understand this fundamental difference. Capital, like Bitcoin, can be super volatile, but it's designed to compound over the long term. It requires patience. But the world, for the most part, runs on credit. People and institutions want stable, predictable income. They need stability, not massive price swings.
So here's the MicroStrategy game plan in a nutshell. They take their volatile Bitcoin and use it as what's called over-collateralization. Basically, they back a loan with Bitcoin that's worth way more than the loan itself. That huge safety cushion allows them to create a stable credit instrument, so the person who holds that credit gets a nice, predictable yield without any of the crazy volatility. Meanwhile, MicroStrategy, as the equity holder, gets to keep all the potential long-term upside of the Bitcoin they're holding.
And is it actually working? Well, the proof is right here in the numbers. Their digital credit instrument, which they call Stretch, is already trading with roughly 100 times the daily liquidity of a traditional preferred stock. That kind of tells you the market isn't just playing around. It's engaging with this new model in a really serious, high-volume way.
And all of this, it all builds up to the final piece of the puzzle, what he calls the end game. Because once you have a stable, liquid credit system that's built on a Bitcoin capital base, well, then you can build the top layer, brand new forms of digital money. And we're not just talking about boring zero-yield stablecoins. We're talking about money-like instruments that could actually pay you a meaningful yield.
So this is the direct pitch he's now making to actual governments. Number 1, get your sovereign wealth funds to hold these new digital assets. Number 2, let your regulated, trusted banks handle the custody of the base asset and start building out that credit layer. And number 3, position your country to become a global hub for building the next generation of digital money on top of it all.
And this right here is his closing argument. It's so powerful. He's saying this isn't about ideology anymore. The race isn't to convince people to believe in Bitcoin. The race is to build the best, most efficient financial plumbing. Because at the end of the day, capital doesn't really care about belief systems. It's pragmatic. It will automatically flow to wherever it can find the best yield, the most safety, and the biggest scale.
And that really leaves us with this final thought. If Saylor's framework is even remotely correct, then the whole debate about Bitcoin's legitimacy, it's already in the rearview mirror. The real question, the one that's going to shape the next decade of global finance, is right here. It's no longer a question of if, but a high-stakes race to decide who builds this system, how they do it, and which countries are bold enough to lead the charge.